Good afternoon, everyone. David here. It's 4 minutes past 5 on Thursday, the 26th of March. I'm looking at VectorVest USA. That's running in real time, and I suppose that's about 1:05 in the US. So still the afternoon session to come. So for the last couple of days, off the low, based on that stimulus that you know as much about as I, markets have done exceptionally well. So as you can see today, a strong day. The advances significantly ahead of that of the declines. And for the last couple of days now, the primary wave on VectorVest has been up. Okay, the underlying trend is still down, and the underlying trend confirmed by price action, we're still in a confirmed down. So there's a long time to go before this market closes, but at this moment in time, i.e. now, there is a green light, and that means that the price of the VectorVest composite of the US is up day over day and week over week. That's a really good signal. So if that's sustained, that's a very positive signal for this marketplace. There's still many more shares on a buy than on a sell, and as you can see, the buy-sell ratio really hasn't shifted very much in this at all. We'll have a look at that in a second, but the buy-sell ratio is still on its knees at 0.02. MTI has climbed a little bit to 0.032, but these still mired in a deeply and a mega oversold situation. Let's have a look at maybe a measure of the market that you know better, the S&P 500. There's the S&P 500. It's a bar chart. I know that dates me as a dinosaur, but I do most of my short-term trading with bars rather than candles. And as you can see, there is this a low that I talked about at the start of the week. Markets went down and took out that obvious low. Clearly a huge source of liquidity down there. So if we have a look at this, and I want to draw a fib in now in long-term charts like this, I tend to go from closing price to closing price because that's where the liquidity is. And if I go from the closing price on that particular week in 2016 to the highest closing price 6 weeks ago, we can see that the 78.6 retracement is exactly and to the tick at that level. And ladies and gentlemen, it didn't stop there for any other reason than that was anticipated. Whether the level is sent down by God, it's absolute, or whether it's self-fulfilling, I'll leave you to decide on your own. Nevertheless, the market stopped there to the tick at 2200 on the S&P. And we've now got this huge outside week. We've got half a session today to go, a full session to go on Friday. A lot of things can change between now and the end of the week, but it's certainly looking much better than it did this time last week. Okay, so now let's just look at the detail of this. So there's the 3 months, and that's the old low way back in 2016. There's the Fibonacci, the 78% retracement. Isn't that quite something? Is quite something. Markets came off here. Now, there are many interpretations here, folks, but the Elliott analysts out there, and that's quite a powerful lobby, are calling for this to be a wave 1 down. That's wave 2. This is wave 3. We're presently in wave 4, and they're actually calling another leg down here before this first wave is over. I'm unsure of that. Now, if I get rid of all the lines, if this is a wave 4 is invariably either a 38% or a 50% retracement of wave 3. And if we saw a turning point here, I think that this can easily come down to test these lows. I don't think anybody knows what's going to happen next. It is my view, ladies and gentlemen, that you need to be very careful here, and I think that whatever happens, that this is highly probable bear market rally. I have got positions on the long side, both in this market and positions in the forex market, and those positions in the forex market are only working because the Dow is rising, long of the euro and long short of the dollar against the Canadian, for example, all totally correlated with the rise in the SPX here and in the VectorVest composite. I will keep my idea that this is a bear market rally, whatever this is, whatever this wave count is, until the market breaks above that 78% retracement. If I see closes above that 78% retracement, then I shall conclude that this bottom is in, and we're going to have some form of melt up to the upside based on the huge amount of stimulus either side of the pond. Our stimulus, the American stimulus, not by the ECB. For the moment, markets are rising. I think that we need to be very wary here. I suggest that if you've bought into this market, aggressive traders at the first primary wave turning up, that do your best to try and get your stop losses up to entry as quick as possible. I hope that helps. Thanks very much. Bye-bye.